First and foremost, happy Memorial Day. In today's show, we'll be discussing the worst month for the Bitcoin price action in 10 years. I'll also be sharing the 5 things to watch out for in the Bitcoin market this week. And as Glassnode points out, Bitcoin market currently has 3 supply trends in play. Number 1, short-term hodlers are distributing/selling. Number 2, long-term hodlers are hodling/accumulating. And number 3, miners are accumulating. The Bitcoin market is a battleground between the bulls and the bears. And as you can see right here in this graph, the only ones selling during these times are the weak hands, which are the short-term hodlers. And as the Bitcoin archive reminds us, the Bitcoin bull market in 2017, which has a lot of similarities to this year, we saw 153% average gains after 30 to 40% corrections. I wouldn't miss this upside for the world. You can say that again. Also in today's show, here's why central banks could add Bitcoin and crypto to their balance sheets, according to ARK Invest. Cathie Wood, the superstar hedge fund manager, says she sees a scenario where the central banks could start accumulating Bitcoin and other crypto assets. I'll be breaking down the highlights from this exclusive interview for you right here in today's show. Also in today's episode, Bitcoin will surge 500% this year as a tsunami of cash comes back to crypto, says Bitcoin firebrand Max Keiser. That's right, early Bitcoin investor and proponent Max Keiser is undeterred by the recent crypto market crash. In a new interview on the Wolf of Wall Street's pod, Keiser says that massive money printing and fresh signs of inflation will force companies to increasingly buy Bitcoin this year. Quoting him right here, when corporate America really runs out of room to finagle and to escape the Bitcoin reality, they've got to make the move. I think it happens in 2021. My price target for 2021 is still $220,000 per Bitcoin. It's an aggressive price target, but it's based on the US dollar running into severe trouble. And he also recently tweeted, I'm still looking for Bitcoin to hit a new all-time high by June 4th, which is only 4 days away. He also reminds us that Bitcoin can gap $20,000 higher at any moment. New all-time high incoming. That's right. Also in today's show, we'll be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and all the major altcoins are currently pumping back in the green. But where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor, Blockfi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin, so you can literally have your Satoshis work for you. They're also paying out a 10% APY on stable coins, and they do have a new product, which is their Blockfi Bitcoin Rewards Visa credit card, which you can see right here. Here's how it works. You purchase anything where Visa is accepted, and you'll earn 1.5% Bitcoin back on all purchases. And for a limited time, by using my referral link in the description right down below, you'll actually earn 3.5% Bitcoin back on all purchases within your first 90 days. And it gets better. They ditch their annual fee, truly making this a no-brainer. To take advantage of this, as well as get up to a $250 crypto bonus with a deposit of $100 or more. So what are you waiting for? Click the link right down below. Let's start stacking those sats and get your Bitcoin Rewards Visa credit card from Blockfi today. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. Happy Memorial Day. I really hope you're enjoying your weekend. This has been the worst month in Bitcoin history, or I should say in the past decade for BTC, a very bearish May. But now let's discuss the 5 things to watch out for in the Bitcoin market this week. Let's start with inflation spooks. The macro mood. That's right, it's a quiet day for stocks and commodities thanks to holidays in the US, the United Kingdom, and elsewhere in the West. That said, Asian markets are mostly stable anyway as traders gear up for the beginning of a traditionally slower summer period. Zooming out, however, the picture gets decidedly less steady. The reason, sources are telling mainstream media, is inflation. Long a concern amid the international rebound from the vid, fueled by huge central bank liquidity creation, the long-term impact of engineered recoveries worldwide is looming large on the horizon. Some telltale signs are already here, such as spiraling manufacturing costs, which may not be fully reflected. Policymakers have committed to accepting a higher level of inflation, higher volatility in inflation, and as that happens, you will see inflation moving structurally higher, says Mikso Das, an equity strategist at JP Morgan Asia. He told Bloomberg the following: I don't think it's in the prices yet. And right here, you're looking at the Fed balance sheet, which is astronomically high, off the charts. Inflation, by its very nature, is the antithesis of the Bitcoin standard, given that crypto's fixed supply and diminishing issuance curve, which cannot be manipulated. As we all know, there can only ever be 21 million Bitcoin in existence. And let's not forget that there's probably millions lost and gone forever, making Bitcoin the most scarce, hardest form of sound money in human history. And as such, demand from institutions and those with large exposure to cash should continue to expand in line with inflation, which is being increasingly tolerated by the central banks at higher levels. In a debate about Bitcoin's energy usage earlier this month, Saifedean Ammous, the author of the Bitcoin Standard, suggested that around 10% of global wealth is already eradicated by inflation every year. As he shares in this tweet, it isn't a more energy intensive way of doing consumer payments, it's a less energy intensive way of achieving consensus than war. That, my friend, is a fact. Take that, Elon Fudd puppet. Now, the weak hands can't stop selling, which is the next factor to keep your eyes out on this week. It's a somewhat gloomy picture for Bitcoin hodlers on Monday, as the weekend failed to produce signs of a bullish price rebound. And at the time of this recording, Bitcoin is trading just above $37,000, having slowly drifted downward since hitting local highs of $41,000 last week. Those highs came soon after another retest of 30,000 support, which saw Bitcoin bounce at 31K, reestablishing the familiar trading corridor it has moved in since the capitulation event earlier in May. Now, depending upon who you ask, this setup is either a golden accumulation opportunity or a nightmare, and the split seems to match with the market experience. Now, in my humble opinion, this is clearly a golden accumulation opportunity. It's called BTFD. Buy that freaking dip and pick up your Bitcoin on sale. According to fresh data from on-chain monitoring resource Glassnode Analytics, at the current levels, old hands are adding to the Bitcoin stack, while the recent buyers continue to sell them. This classic weak hands to strong direction is nothing new, but its pace is increasing. Miners too are back to buying, reversing a brief cascade of selling, which accompanied the first dip to $30,000, as Glassnode shares here. Bitcoin market currently has three supply trends in play. Number one, short-term hodlers are distributing / selling. Number two, long-term hodlers are hodling / accumulating. And number three, miners are accumulating. The Bitcoin market is a battleground between the bulls and the bears. As you can see here in this chart, it shows you the only ones selling right now with the weak hands are the short-term hodlers, which are probably more than likely retail investors. Lark Davis shares, this chart is insane. Miners and long-term hodlers accumulating, only short-term hodlers are selling, nothing new under the sun. That's right, Bitcoin's weekly relative strength index, known as the RSI, is a key metric for dividing overbought and oversold territory, is also circling lows which have only been beaten by the March 2020 crash and the $3,100 capitulation back in December of 2018. Now for the third factor to keep your eyes out on this week in the Bitcoin market, key price averages causes headaches for the bulls. In terms of bull or bear, there are lines in the sand for traders, which Bitcoin still needs to preserve to retain its bull market crown. In its latest market update, Trading Suite Decent Trader highlighted the 200-day moving average and 20-week moving average as significant levels to watch, which I broke down in great detail in yesterday's episode. If you missed it, be sure to check it out. The 200-day moving average currently sits just above 40,000, the place at which Bitcoin saw a rejection last week, while the 20-week moving average is higher at near $49,000. Should Bitcoin find sufficient demand in the low 30,000s, the 20-week moving average would be expected to act as resistance. Decent Trader summarized along with the following: a drop lower would likely make the low 20,000s or the 78.6% retracement a likely target. As such, price action over the next week is particularly important. The idea that Bitcoin could return to its 2017 high of $20,000 is unpopular for many, including myself. I feel it's very unlikely to happen, though it's in the realm of possibilities. Plan B also says it's very unlikely to happen, while acknowledging that his models were still being tested by price swings. The idea of a fresh capitulation down to 20,000 is not something he considers likely. Of course, I disagree. Stock the Flow and On-Chain point to much higher prices, between 100,000 to 288,000. That's right, Stock the Flow X predicts a $288,000 Bitcoin price before the end of this year. He says time will tell in a recent Twitter discussion. He also adds that Bitcoin's realized price, a calculation of Bitcoin / USD based on the price at which each coin last moved, is now at 23,000. During the 2013 and 2017 bull runs, realized price shot up by an order of magnitude, and this year is yet to copy them. At 23,000, we have some way to go in my opinion. He commented alongside a chart, which you can see right here on your screen, which shows the realized price against the 200-week moving average. And before I share the fourth and fifth thing to be on the lookout for in the Bitcoin market this week, let's first take a quick look at the overall crypto market. We can see Bitcoin up almost 5% now for the day, trading above 37,000. We have Ethereum up 8%, trading just under $2,600. We have Chainlink up 6%, trading just under $30. XRP breaking out, up 16%, trading at $1. We have Binance Coin up 8%, trading at $354, and Cardano up 3.5%, trading at $1.68. All right, now for the fourth factor to keep your eyes out on this week. Funding rates soothe concerns. That's right, for some counterpoint, an example of the hidden bullishness, which may serve to characterize near-term price action, lies in the exchange funding rates. Currently healthy negative, these suggest that it's very much a case of shorts paying longs under current circumstances. Open interest has failed to recover, with leveraged participants being largely wiped out in the sell-off and not re-entering. Funding has also remained low/negative, which further echoes the market sentiment. And as Cointelegraph reported, the capitulation of leveraged bets during the $30,000 sell-offs has effectively reset market composition as traders avoid taking risks. That's because they're all getting wrecked, especially leveraged traders right now. This should allow more organic price growth fueled by genuine demand from those more likely to hodl Bitcoin for the long term rather than a short-term speculative bet. And right here, you're looking at the Bitcoin funding rates chart brought to you by buybt.com. Now for the fifth and final factor to keep your eyes out on this week is the fact that this may be the worst May ever in terms of price action. That's right, on the last day of May 2021, the mood is likely anything but positive as monthly losses for hodlers total almost 40%. By comparison, May tends to be a lucrative month for Bitcoin in 2017 and 2019. For instance, the pair gained more than 50% in May. 2018 was an outlier with 19% losses, but even these pale in comparison to this year. May 2021 is currently on track to be the worst month since 2013 in terms of quarter one and quarter two performance. As you can see right here, it shows you the Bitcoin monthly return percentages from 2013 all the way up to 2021. And yet the doom and gloom are far from everywhere. Beyond Bitcoin, altcoin markets also showing signs of life. As I shared, XRP just rebounded 16% for the day. As traders note, volumes for the largest altcoin, Ethereum in particular, are promising. In contrast, bear market behavior, which tends to see little trading activity. Checking out this tweet from CryptoEd. During my morning updates, I noticed alts looking way stronger than Bitcoin. Bitcoin looking bearish. Then I saw this tweet giving me the idea that we shouldn't bother too much about a weaker BTC, as it might follow the stronger alt/USD pairs or continuous chop sideways while alts go up. So there you have it. And checking out this tweet from the Bitcoin archive, Bitcoin bull market in 2017, which has many similarities to this year of 2021, as I covered in greater detail in yesterday's episode. He points out that 150% average gain after 30 to 40% corrections back in 2017's bull market. I wouldn't miss this upside for the world. That's right, I wouldn't be surprised if we have one of the most bullish months in Bitcoin history, considering we just had one of the bearish months historically in Bitcoin history. Before I break down our next story of the day and I share why central banks could add Bitcoin and crypto to their balance sheets, according to ARK Invest, Cathie Wood, as well as Bitcoin will surge 500% this year as the tsunami of cash comes back to crypto, says Max Keiser, and even shares a very bullish price prediction that Bitcoin will hit a new all-time high by June 4th. But before I break this down, first let's take a quick look at the overall crypto market cap, sitting back above 1.6 trillion with 108 billion in volume in the past 24 hours, and the current Bitcoin dominance at 42.8%, with the Ether dominance at 18.4%, and the current Bitcoin market cap just under 700 billion, with the Ethereum market cap just above $300 billion. Now checking out the top gainers within the top 100, we have the Graph up 15%, trading at 78 cents. XRP still up 14%, trading at $1.02. Decred up 13%, trading at $1.71, and Swissborg up almost 10%, trading at 85 cents. Now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated an 18 in extreme fear. Yesterday was a 10, last week a 10, and last month a 68 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. Cathie Wood, founder of global asset manager company ARK Invest, says she sees a scenario where central banks could start accumulating Bitcoin and other crypto assets, which would not only just be bullish for Bitcoin, but for the entire crypto market. In a new episode of the Breakdown podcast, the superstar hedge fund manager says her firm believes that deflation, not inflation, will hit global markets as consumer demand shifts from commodities to services. Quoting her right here from this interview, "We are thinking that much higher probability is deflation. I know most people think that it's crazy given what's going on, but we've seen a crack in some commodity prices already. Lumber, an important one. What we think has happened here is consumers have spent the last year spending their money on the only things that they could, and those are goods, durables and non-durable goods. Businesses were behind the curve even before the vid because of the inverted yield curve. They were afraid of a recession, so they were fearful and positioned conservatively. Consumers took off buying goods and are now being vaccinated. Shoot hoops." not poison. Just saying. They're going to shift their market basket from goods to services. So I think what's going to happen here is businesses, which may be double and triple and quadruple ordering right now to try to get supplies, they're going to get those supplies as the market basket is shifting towards services. And I think commodity prices are going to have a significant fall into next year, with commodity prices sinking as businesses try to get rid of excess supply. Wood predicts that emerging markets will take a massive hit. She adds that the effects of deflation will cascade into the fiat currencies of emerging markets, which will drive their central banks to seek refuge in Bitcoin and other cryptocurrencies. Quoting her again right here, I think though in emerging markets, if commodity prices come down, a lot of them are linked to commodity prices, their currencies will come under pressure. I think what will happen as currencies come under pressure, the velocity of their money will increase as more and more of their population shift into Bitcoin and other cryptocurrency assets. This is always true when you're talking about currencies, inflation, deflation. It hits different regions of the world differently. I wouldn't be surprised if some of these emerging market central banks start accumulating Bitcoin and other currencies. If they know their currency is going down and that they would be under attack for the reserves going down, maybe they have a balance sheet with Bitcoin and other crypto assets. Now, I agree 100% with ARK Invest Cathie Wood that central banks around the world, it's only a matter of time before they start putting Bitcoin on their balance sheet because it can literally save their country. Now, before I break down our final story of the day, Bitcoin will surge 500% this year as a tsunami of cash comes back to crypto, says Max Keiser. He even shares a very bullish price prediction of a new all-time high for the Bitcoin price by June 4th, which is only 4 days away. But before I break this down, first I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 800 plus videos right here on my YouTube channel. Also some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsjess.com. Also be sure to smash that subscribe button right below this video and turn on all notifications to receive daily premium crypto news alerts every single day, including holiday weekends just like this. You can also find me on Spotify, the home of the Joe Rogan Experience. You can also find us on iTunes. You can also follow me on Twitter. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy with over 19,000 cryptopreneurs from all over the world. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. Early Bitcoin investor and proponent Max Keiser is undeterred by the recent crypto market crash. That's right, Max Keiser started investing into Bitcoin back when it was $1 in 2011, and he's been sharing it with us in the Keiser Report and also more recently in the Orange Pill Pod. So much respect to Stacey Herbert and Max Keiser. In a new interview on the Wolf of Wall Street's pod, Keiser says that massive money printing and fresh signs of inflation will force companies to increasingly buy Bitcoin this year. He sees corporations taking part in a Bitcoin buy-in spree that fuels a 500% surge by the end of 2021. Quoting him from this interview right here, when corporate America really runs out of room to finagle and to escape the Bitcoin reality, they've got to make the move. I think it happens in 2021. My price target for 2021 is still $220,000 per Bitcoin. It's an aggressive price target, but it's based on the US dollar running into severe trouble. So there you have it. Let me know if you agree or disagree with Max Keiser's year-end price target for the king of all crypto. Keiser points to MicroStrategy's initial $1 billion Bitcoin purchase, spearheaded by CEO Michael Saylor, as the tipping point for an era of corporate investment into Bitcoin. Quoting him again here, he's thrown down the gauntlet, and so now every CFO and every CEO and every board member of every public company now has to take that on board. Keiser also highlights comments from legendary institutional investor Paul Tudor Jones, who says that Bitcoin is a digital form of gold that's likely the fastest horse in the race in an era of inflation. Quoting him again here, institutions realizing that inflation is in fact not transitory, it's secular, it's structural, it's here for the long haul, and if you're not protecting yourself, you're going to be wiped out. And as Paul Tudor Jones said about Bitcoin, it's the fastest horse in the race when he's comparing it to gold, for example. So you've got this wave, a tsunami of cash comes back into Bitcoin. And to watch this entire interview of Max Keiser on the Wolf of Wall Street's pod, check the show notes below the video in the description. I highly recommend you watch it. Now for some very bullish price predictions from Max Keiser. He just recently tweeted, I'm still looking for Bitcoin to hit a new all-time high by June 4th. Now considering today is May 31st, June 4th is only 4 days away. Do you feel it's a possibility that Bitcoin can rise from about $37,000 to where we're currently at, all the way up to $65,000? Let me know your honest thoughts in the comments right down below. That would be at the time of the Miami Bitcoin conference, which is just a few days away. He also goes on to share that Bitcoin can gap $20,000 higher at any moment. New all-time high incoming. Thanks for the reminder, Max. And he also tweeted that Bitcoin is pulling energy away from fiat money and central banks as designed. The total amount of energy used is meaningless. The fact that Bitcoin is defunding central banks and fiat money is the purpose of BTC. That, my friend, is a fact, and you can see Max flexing on him right here. Now, for a quick recap, what I cover with you right here in today's show, I shared that this was the worst month for the Bitcoin price action in the past 10 years, and I shared the 5 things to watch out for in the Bitcoin market this week. We also discussed why central banks could add Bitcoin and crypto to their balance sheets, according to ARK Invest, Kathy Wood, and also talked about Bitcoin surging 500% this year as the tsunami of cash comes back to crypto, according to Max Keiser. Also shared his bullish price prediction of a new all-time high for Bitcoin in 4 days by June 4th. So where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, including weekend holidays, just like this.